We are back and we are talking once again to Uday Ahuja, Chief Investment Officer of 𝗟𝗲𝘂𝗍 Ventures, a private investment firm that holds multiple assets, including 𝗬𝗠𝗂𝗂, Fuku, Magnolia, and Pizza, Bluestone Lane, all of my favorite places in New York City. Even though I recently moved, I'm forever a New York City woman. Welcome back to the show, Uday. So let's get into it. Let's talk about 𝗟𝗲𝘂𝗍 Ventures. What is this company? What is your role in this company?
Yeah, thank you for asking. 𝗟𝗲𝘂𝗍 Ventures is a direct investing platform that was co-founded by Matt Higgins and Steve Ross, where we invest Steve Ross's capital. So in many respects, we function as an extension of sort of a family office, if you will. What that means is it changes up sort of how we approach investments relative to others who are raising third-party capital, like typical growth equity funds, early stage venture funds, etc. So we started back in the day as an extension of the Miami Dolphins with a desire to build and incubate and invest in businesses in and around the sports and entertainment ecosystem, which we did in our first few years of our existence. And the mandate quickly grew from there. Most relevant to this conversation, of course, is our foray into the consumer space, which started with our investment in the Momofuku Group. And while sort of the qualifications and brand recognition for Momofuku, stands on its own feet with respect to their restaurant fortitude, we also saw the potential to go beyond restaurants and in sort of the omni-channel aspects of the business. But before we did that, we saw some other interesting assets that were part of the group. So we spun out Milk Bar, funded it, and stood it up as its own company. We did the same thing with Fuku, which is Momofuku's fried chicken sandwich concept, and most recently with Momofuku's CPG business. And that led our sort of foray into the restaurant and consumer space, where we have invested in some of the brands that you mentioned, such as 𝗀𝗃𝗃𝗃, Bluestone Lane, and of course, most recently, we completed the acquisition of Magnolia Bakery. As a chief investment officer of the group, it is my responsibility to help source, lead, diligence these investments, but it's not where it ends. Once then we have custody in terms of being a large minority owner, or in Magnolia's case, as I mentioned, the majority owner of the company. That's when we get to work and help companies sort of develop and evolve in their strategy and their growth plans, whether that means channel expansion or fundraising. It spans the spectrum. So we're involved intimately at a board level, but also as an investor actively in sort of each of these companies' strategic and operations focus of the business.
There is no shortage of work for you there. 𝗟𝗲𝘂𝗍 Ventures, as I mentioned before in the intro, has an impressive portfolio of restaurant and consumer brands. David Chang with Momofuku, Milk Bar, you just said, 𝗀𝗃𝗃𝗃, another great brand. I hear a lot of good things about it from my friends. Certainly a good sign. Tell me, Uday, what are some of the key things that you look out for, when you and your colleagues are, on the hunt for, a new investment?
Yeah, absolutely. I think part of it is stage driven, which is where we're going to come in, and let's talk about it in restaurant parlance, right? When something is 5 to 10 units and has proven its economics, not only past the first and second unit of opening, but across multiple markets and geographies, and then step in and provide growth capital that most of these businesses so critically need at that time to sort of take the next step in their evolution. For us, several criteria are very important. We love backing strong, passionate founders. And so therefore, more often than not, the strategy has to be founder-led, with a robust, passionate following, with sort of this fanatical consumer adoption behind it. The other most important factor that has sort of become even more prominent recently is the ability to scale. And that means whether that is omni-channel in nature, meaning direct to consumer, CPG, or just if it's a restaurant-centric concept, brick and mortar only, the ability to scale to 50, 100, 125 units. So is there an ability to be repeatable, consistent with performance across sort of a broad swath of markets, but also across locations and units. So those are a few of our sort of key criteria of investment. And I think as you've listed out some of our brands, hopefully you can sort of see the key thematic across most of them.
Absolutely. I mean, you know, it's all about those margins. It's all about that mass appeal, and the portfolio you have. To me, it certainly seems to reflect that. I also want to ask you about the strategy that seems so unique to RSE Ventures, CPG growth within a restaurant category. We see that in Momofuku, where you just said, you know, you've delved into a CPG sector. There was that release of the chili crisp, which certainly made a splash, as well as the new ramen product. You also see Milk Bar, you know, multiple brick and mortar storefronts there. You know, want to talk more about, you know, what's the process behind that? That certainly seems to be, you know, something that no other company's really investment firm is really doing, you know, that kind of CPG growth strategy within the restaurant sector.
Yeah, I think it's a really important part of our investment philosophy and criteria is to be able to diversify revenue streams. And certainly, you know, it was helpful to have that philosophy before COVID, and that only became more important and apparent through the pandemic. You know, Milk Bar did phenomenally well through the pandemic, through its D2C strategy when bakeries weren't open, and other businesses in our portfolio as well. But having those multiple channels helps you diversify the risk in your business for events like COVID, but even subsequent to COVID, when direct-to-consumer businesses became very expensive to run, having the bakeries in Milk Bar open back up again and have the CPG channel were tremendously beneficial to the overall health and growth of the business. But to go back to the beginning in terms of why CPG, I think it works in certain instances and certain cases. Certainly, we do not force it upon our businesses, but that is an ultimate way to achieve scalability in a way, in a shorter duration of time, rather than go about and open, call it, you know, 500 locations of something nationwide. So a CPG product is a way to bring something that is special from one concept nationwide in sort of a more scalable, efficient way. And that's really goes back to sort of what we were talking about, which is how do you achieve scale? And to the extent that you can do that via a beloved CPG product, that is probably the most economical way to do it in the long run. And again, you can't force it, right? The Chili Crunch, the noodles, the Milk Bar, ice cream, all of these products are beloved and rightfully so. So the product has to fit. There has to be the right product market fit. And at the end of the day, the addressable market has to be large enough for each of these products. Otherwise, you're likely to have something that, you know, is a niche product at best, which may not serve the overall goal of scalability that I was talking about earlier.
So scalability, the key word coming from this conversation with RSE Ventures Chief Investment Officer Uday Ahuja. Uday, thanks again for joining us. This was great.
My pleasure. Thanks for having me.
All right, before we go, I just want to touch base on some events that are coming up in the food world. On Tuesday, February 28th, FI will have a webinar on the CPG industry covering key themes and an outlook for 2023. Also on that Tuesday, Target will release its results for fourth quarter and year-end 2022. And Wednesday, March 1st, we'll see earnings releases for Wendy's and Jack in the Box, while Anheuser-Busch and Hormel will report earnings on Thursday, March 2nd. Definitely want to mark your calendars for those events. And that wraps up this episode of the FI Newscast. Be sure to tune in to us again, same time, same place next week, where we will have a special guest. His name is Hunter Thurman. He's president at Alpha Diver, a consumer behavior insights firm. We'll have some great critiques from him. Don't forget to check out all the great content that we offer at www.foodinstitute.com. And most importantly, don't forget to click on that little subscribe button on YouTube. Thank you so much for joining us. We hope that you will see us again next time. Have a great weekend.